Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Dave V., Jared W., and Andy J. Craig Parry has returned to the show. Craig is President, CEO, and Director at IsoEnergy, an exploration stage company focused on uranium in the Athabasca Basin region of Canada. The company is listed on the Toronto Venture Exchange under the symbol ISO and also on the US OTC markets under the symbol ISENF. Craig, welcome back to the show.
Hi, Andrew. Good to be back.
Well, Craig, where are we with uranium at this point? It appears a good chunk of investors and traders are tired. What are you hearing within your contacts and thoughts on the market at this point?
Well, you look at it continues to be relatively tough, I suppose, Andrew. We've been in this downturn for the better part of 7 years now post Fukushima. Although people point to Fukushima as the major problem, we think the major problem really was, of course, Kazatomprom flooding the market with their pounds of uranium when they got their major mines into production back in sort of 2009 and 2010. And so that still continues to wash over the sector in a way. But we've started to see all of the supply side shocks and cutbacks that needed to happen to correct that. So, and that's all starting to wash through the market. There has been for the last couple of years, of course, back in 2018, midway through 2018, Cameco closed the giant McArthur River mine, the world's biggest uranium mine. And that, I think has put us back on the right footing for the sector. And we've seen uranium prices start to rise off that bottom of about $17 a pound to now up to about $25 a pound. And of course, Cameco are in the market buying pounds to meet their long-term commitments. And we think that will continue to have an impact. It's been a little bit slow to have that impact over the past 6 months, but we understand, talking to our friends at Cameco recently, that they'll continue that buying program. And we all expect prices to rise pretty strongly in the not too distant future.
And what would you say to investors who have been in this sector maybe for a couple of years now that are starting to question their thesis, starting to question the whole uranium thing, and are growing impatient?
Yes, well, look, we're in that same boat, of course, being investors personally ourselves. And all we can say is that it's really a matter of hanging in there. These things don't last for too long. The typical turnaround in any sector in the mining space, we think, is probably 2 to 3 years. And so we've been in that really low price environment for about 2.5 years now. So and the pain the industry had to go through, that's happened. So it's a matter of hanging in there, and I suppose very importantly, and Rick Rule speaks very eloquently on this, we enjoy listening to what Rick's got to say, is that getting in early is an issue, but when you're dealing in the uranium sector, when we do get a market, the returns are extraordinary. You've only got to look back to 2000 from the period from 2004 to 2007. You're talking about many times your money invested in terms of returns on equity. So, you want to be invested now. You want to be invested at these very low equity prices because when it does turn, it turns very quickly and the prices rise, outperform every other sector by some margin. So for us, it's a question of sticking to our knitting, hanging in there, encouraging our investors to do the same. And safe in the knowledge that these low prices can't last for too much longer.
Now, you've just started up a drill program over at the Hurricane Zone Discovery. What is the plan here, Craig, and what do you expect coming out of this as far as results?
Yeah, so look, this is our most aggressive program to date. We're in the process. We actually started the program earlier this week, so we're getting down to sort of the depth that we want to on the first couple of holes. previously, you know, we've done 2 significant drill campaigns with one drill rig. We've drilled 29 holes to date. We've defined a 500-metre long high-grade mineralised zone at our Hurricane discovery. So we're looking to extend that. We're looking to do some infill drilling. If people look to our website there, www.isoenergy.ca, our presentation outlines this pretty well as some of our most recent news releases. We'll be drilling in and around some very high-grade intercepts that we've got there. We've closed off only one section, and we haven't closed the deposit off on strike. So we've got to do all of that work. And you know, you can never guarantee good drill results, but the fact that we're drilling around high-grade mineralisation means that we should have pretty strong news flow over the next couple of months. So look out for all of that. And then the other rig we've got out to the east, we've got a very significant anomaly. Both we drilled one hole, our hole 26, out on the edge of an anomaly, a resistivity anomaly to the east that sits on the structure that controls that mineralisation at Hurricane and over at Cameco's Larocque North deposit. That you know, we're targeting. Hole 26 hit some elevated uranium and very strong geochemistry and a major alteration zone. So we're drilling around that as well. So we're looking forward to seeing what we hit over there. And we've got a plan to drill along that conductor further out to the east. So if we hit out there, well, that will be a significant discovery in itself. So we're looking to do that. So we've got 2 rigs going, lots of news flow over the next 6 to 8 weeks.
And Craig, regarding the hurricane zone, do you see that the zone extends beyond the property boundary to the west at this point, or are we too early to tell?
Good question. Well, no. Look, we do know that Cameco, you know, these deposits often occur in that sort of string of the much overused string of pearls analogy, and 6 kilometres down to the southwest of our property, Cameco has their Larocque deposit. That you know, the best intercept that Cameco had there was 7 metres at 29.9% U3O8. So stonking great intersection there. And then across only about 1.5 kilometres away from our hurricane zone, you've got Cameco's Larocque North deposit. Now, they haven't done much work there, but they've certainly had some good mineralized intercepts. And you know, everything points to the fact that that hurricane probably continues to the west and onto that property. We'll know that in a couple of weeks. We're drilling out to that property boundary to see what we've got out there. You know, we've spoken to Cameco about that property a number of times. We'd love to see them, love to encourage them to do some work there and see what else is across the property boundary. Of course, the more interest we can generate, the better.
Any plans for other property work, perhaps at Geiger, Radio, Thorburn during 2020, Craig?
Yeah, look, we're very much, you know, I suppose, since we started the company, very much focused on getting as much of our investor dollars into drill holes as we can. And so with that discovery, that allows us to do that, and we're focused there. That's where our investors get the best bang for their buck, with us hitting mineralized intercepts and proving up a deposit over time. So our focus is very much on Hurricane and on the Larocque East property more broadly. You know, we've ranked and prioritised again all of our properties in the last 6 months. There are, you know, we've got to do a little bit of assessment credit type work to keep properties in good standing. So we'll continue to do that and start to prove up more and more targets out there. You know, if you look, probably our second priority property there at the moment would be our Thorburn Lake property. Again, only 6 or 7 kilometres to the east and long strike from the giant Cigar Lake deposit. We've got some very interesting anomalies there that have never been drilled. We did a little bit of drilling there a couple of years ago and hit some mineralisation, but nothing to continue on with there at that particular time. But we'll get out there and continue to test those in due course as well. But I think, you know, for the time being, our best hope is to continue to focus our efforts on that hurricane deposit.
So the company acquired Collins Bay and Edge properties in October 2019. What's the reasoning behind this move? And going forward, is the company keeping its acquisitions limited to the east side Athabasca Basin?
Yeah, excellent question. Look, our focus on acquisitions, we have been out there and we've done a few deals in recent times. Of course, Larocque East was a very good example of that. We acquired that in May 2018. We had a drill rig out there. We acquired that off Cameco for $300,000 worth of stock. We had a drill rig on the ground 6 weeks later and announced the discovery of the Hurricane Zone 2 weeks after that. So, that was a very effective acquisition for us. However, our focus is more on lower cost acquisition of ground. So we've been very active in staking. Now it's very competitive to get ground in that eastern Athabasca because it is so well endowed with uranium deposits. But we've got some tools and approaches that allow us to beat off the competition there. And so Edge, Collins Bay extension, very good sort of example of what we're doing with our strategy. That Collins Bay extension, that covers the fault and structure that hosts some of the world's great deposits, and really MacArthur River, Cigar Lake, and on to Eagle Point and Collins Bay all sit within that corridor, but particularly Collins Bay and Eagle Point. They're only a few kilometres away, so being able to stake that ground was very appealing to us. So we're excited to get that ground, and we'll turn some of our attention to that. But we've got to do some early stage work. It's probably a year or so away before we have drill targets there. And then the other thing about that strategy, and to answer your question on where our focus is. Look, we've left the western part of the basin largely to our major shareholder, Nexgen Energy. Of course, Nexgen owns 52% of the company and continues to support us greatly. Our focus is more on this eastern side of the basin. We think that the eastern part of the basin is very much underexplored, if at all, for basement-hosted deposits. There've been a few discovered, of course, but not many. Steve Blower, our Vice President of Exploration, actually led the team to discover the Griffin deposit, which is an example out in the east there, owned by Denison and makes up part of that Wheeler River deposit that they've got there in Denison. So we know that there are basement-hosted deposits in this area. There's not been any systematic and thorough exploration for them. And so that's what we're doing. We're taking some of our knowledge from both Griffin, our knowledge from the Arrow deposit that Nexgen's developing, and employing it out here. And, very importantly, you can see that on our presentation and website there, we're building up a bigger land position in that northeastern shoulder of the eastern Athabasca, if you like, around Rough Rider, north of Rough Rider, around our Larocque East property. And that being because we see that as the most underexplored and highest potential for new discoveries, those zones there and that area. So we'll continue to build our position there as much as we can and just continue to work hard at exploring those properties that we've got.
And where are we on capital structure, Craig, as far as the shares outstanding, cash on hand at this point, and major shareholders that are still on the roster?
We've been around for 4 years, so we've still got a relatively tight structure. We're doing things as, trying to preserve our capital structure as much as possible and not dilute our shareholders. We've only got 84 million shares out today. Not many warrants. We haven't had to issue many warrants so far. So we're in a neat position there. We've got 7 million in cash. We did a placement for 6.7 million back in early December last year, heavily supported by Nexgen. Nexgen contributed 2.9 million of that. We had a number of flow-through funds come in as well, and then CQS, one of our shareholders out of London, major fund there, they supported that placement as well as Steve Blower and myself. We continue to subscribe to each new placement that we do. So that puts us in a neat position. Not bad going for a uranium junior in the current market to raise $7 million at this point in time. So that sets us up very well to do all of that work we've got to do. We've managed to do it at a pretty good share price that sees not too much dilution. And that leaves us with a share register that reads a little bit like a who's who of the uranium space. We've got Nexgen there with 52%. Cameco continue to hold about 4%. We think Urano sits there with about 2%. They've acquired their stake in the company through our deals and property acquisitions. So we've got those majors there. Cameco tell us that they're happy to sit there with that interest because it gives them a foot on the company if we make a major discovery that's of interest to them. And then outside of that, we've got a number of institutional investors. I mentioned CQS there. and a number of other instos. So sticky sort of money. So the free float's very, very minor, really, probably only 20 to 25%. So what that means is that there's a lot of talk in our share structure and share price, and whenever we put out good results or we get an improvement in the uranium price, we tend to outperform. And that's pertinent to this conversation because, as I say, we'll be drilling in and around known mineralisation over the next few weeks and putting out plenty of news flow. And so that talk that we offer to shareholders is crucial at the moment.
Now, Nexgen has been supportive of IsoEnergy, as you've mentioned, Craig, when the company raises capital. Do you see Nexgen continuing to be supportive of the company going forward? And do you see the company raising additional capital in 2020?
Nexgen, incredibly supportive. Of course, Lee Courier, CEO of Nexgen, is our chairman here. Lee's got in modern times, an unprecedented track record of delivering discoveries in the basin and advancing projects. At Nexgen, I'm still an advisor to Nexgen. I stepped off the board to focus on IsoEnergy now that we've got this significant discovery at Hurricane. Last year, I also made way for Brad Wall, who the former Premier of Saskatchewan, beloved Premier, if you can say that about a politician. So, Nexgen are very, very supportive of what we're doing. I think Lee's got a vision of building the world's best and biggest uranium company. And of course, you need a portfolio or a pipeline of projects to do that. And I think IsoEnergy fits within that sort of scenario, if you like. They're very excited by what they see at Hurricane and hence continue to support us thoroughly and write some very big checks to keep the team on the pitch and to keep us drilling. So, great support there.
Do you guys see the need to raise capital in 2020?
If we see this sort of market continuing to trudge along and not improve in any major way, you start to question whether you should be putting out good drill results into that and not see your shareholders rewarded for them. So we've gone into something of a conservation mode when it comes to capital, very much focused on only drilling. We're well funded for all of the year for the program that we've got, or programs we've got planned at the moment. And look, of the capital that we raised last year, 2.9 million of that were in hard dollars. So that gives us about over $3 million of hard dollars at the moment. So that gives us really 2 to 3 years of runway on the hard dollar front where we won't need to raise money. So at this stage, no intentions of raising capital this year at all. If we continue to expand that deposit and see a market, then we might look to raise a little bit more flow through at the end of the year to keep drill rigs going into the new year. But at this stage, we're fully funded for the next 12 months and well beyond that really as well. So no plans now to raise capital.
And a little more on that, Craig, what is being done specifically on the G&A and operating cost front to preserve the capital structure while we move through these market lows in both price and sentiment? Is management planning to press forward regardless of the market conditions, or is there a desire to put the brakes on while holding out for a better condition in the market?
Oh, there's probably an element of both, but at the moment, really, I think we'll push on because we do have more work to do. And one of the things that we do like to pride ourselves on is that we're not just explorers, we are developers. I've been involved in a number of developments throughout my career. And so what we want to do is advance our projects steady as she goes, not spend too much money and not get in front of ourselves, but at a steady pace, drill the deposit out and move forward with resources and should it support it onto development at a fairly steady tack. So that's our thinking at the moment. I'd hate to say that we'd put anything on hold, but I suppose if we see the uranium price fall from here, which we think is highly unlikely, then we might consider that. But at the moment, we'll just keep pushing on steadily and advancing our project in a metered fashion.
Craig, and how are you exposed to this uranium market? Speaking beyond IsoEnergy, can you share some thoughts for investors as to where and how you are personally placing your capital to express your view in uranium, and how big is uranium in your total investment portfolio?
Yeah, good question, and happy to answer that. I'm a significant shareholder there at Nexgen, having been a co-founder with Lee and Chris McFadden. We've still got all of our stock in Nexgen, and so that's my major holding, I suppose, and through that I do have a more significant holding in ISO, or exposure to ISO than you otherwise might see. But so far I've subscribed in, I think, all but one of ISO's placements. So I've certainly written checks for some significant amounts of capital into the company over the last 3.5 years since we started ISO. And you'll continue to see that. My biggest personal holding in anything, including I think outside of our home, is in Nexgen and IsoEnergy. So we're fully exposed. My personal thesis on investing is buy properties, buy projects and companies that have the downside protected in a contrarian way, counter-cyclical way, and both of those companies, Nexgen and ISO, fit the bill completely. We've been in this downturn for a long time. We know the market can't support current uranium production at current prices. It's in a fundamentally undersupplied market, in that the global demand for uranium is about 180 to 190 million pounds a year, and primary supply today is somewhere between 90 and 100 million pounds a year. So we're in a situation where the market's undersupplied by a factor of 50%, completely unsustainable. So we know that prices have to come back at some point in time, and when you get a uranium bull market, they're the most spectacular things. Of course, back in 2007, we saw companies like Paladin. That company delivered shareholders not 200%, but 200 times their money invested. So they're a great thing, a great risk-reward profile there, or risk-reward equation in uranium companies. So we love to be invested in uranium. That's why we started Nexgen back in 2011. ISO in 2016. So we're true believers, I suppose. And so that's our, certainly my biggest investment exposure is in the uranium sector, and specifically in those two companies.
Well, I appreciate you sharing that with us, Craig. For potential investors who are listening, and even existing shareholders, why should they get on board with IsoEnergy for the first time now, and even add to their position at these current levels?
Yeah, great question. Look, the fundamental thing for us is that there's not many companies left in the uranium space. Probably, we think only about 30 that you would consider worthy of investing in, uranium companies that are active. Some of those guys have got pounds in the ground. Some of them have got development pathways, if you like. For IsoEnergy, we're a unique story and a unique play for investors at the moment, in that we're the only uranium company with a new high-grade uranium discovery that we're drilling as we speak. And we'll be putting those results out over the next 2 to 3 months. So if you like exploration exposure, and you think drill results, high-grade intercepts, uranium intercepts will impact the market, then there's one place to come, and that's IsoEnergy.
And how can the audience reach out to you, Craig, for more information and to the company?
Please contact us. We've got our website, as I mentioned there, isoenergy.ca. My email address, cparry@isoenergy.ca. You can ring us on +1 778 379 3211. And you can also contact us through our investor relations people at iso@kincommunications.com.
Craig, I appreciate you coming on to update us about IsoEnergy. Appreciate that. Good luck, and I look forward to speaking later on this year with you.
Andrew, real pleasure as always. Thank you very much, and thanks to your listeners.